Hi, I'm Bert Nussbaumer from macrobeat.co.uk. The market continues to be in a very emotional state. We obviously had the Biden rally after the election, sort of relief rally on the blue wave, even though it wasn't a blue wave at the end. But then just when things started to run out of steam a little bit, we got the vaccine news from Pfizer. We had an incredible risk rally in equities. At some point, I think the Dow was up about 1,600 points. Risk FX obviously had a very strong rally until it sort of run out of steam a little bit towards the end of the day. But obviously we did really get this sort of, forward-looking positive news that we've been sort of waiting for a long time. What we've seen in the equity market was a sort of interesting rotation game. We've seen the Dow rallying quite hard while the Nasdaq was coming off, which in a way makes a lot of sense given that we buy what was repressed by COVID and we sort of sell what's done very well with COVID. And I think this could be a trade that probably get some legs going forward if you really are on course to get a vaccine towards early stage of 2021. We still obviously have the election not being officially called. Trump is still claiming election fraud, but I guess we have to start to see some real evidence of that if he wants to build a case. Reality, I guess the election result will stand as it is, and whatever Trump decides to do, I don't think it's going to harm the transition period at the end of the day. This is really it in terms of the stories during the week. Data is still not really that important. I think we're still in this sort of post-COVID mess of data. Obviously, we have to juggle the positive news from the COVID vaccine. We still have obviously to juggle the negative news with the second wave, still seeing a sharp increase of COVID cases around the world. So it's not an easy market to trade. But the first slide I have for you today is euro-dollar. To be honest, I think I mentioned it before. The dollar just hasn't moved since August, really. It's 116, 119. We had another go at 119 this week, failed, and now we mid-market again. So I think we're just using up too much ink for the dollar right now. I don't see a real reason for the dollar to break out up or down in the majors anyway. On the next slide, this is dollar yen. This is for the first time in a while that actually since 3 years, I've been selling the rally in dollar yen and cross yen for the last 3 years. This week was the first time I start to get a hunch that maybe this could be over. I start to get a feeling that dollar yen could actually trade significantly higher in the next few months, 108, 110, whatever. It's early doors, so I will tell you more about it in the next few weeks, but there is a change on my thinking for the first time in 3 years, really. The next chart, dollar CNH. As you can see, we've broken the massive 660 level in all this election frenzy. We now sort of consolidate around here, but in terms of emerging markets, CNH, Mexican peso, rand, it still seems the market is quite keen to buy emerging markets or risk in general, as it just seems that is the really way forward in the near term, especially if the vaccine news is going to get confirmed that there is a way out of the mess we are in. This will probably mean at some point in time the market has to think whether they really want to sell dollars versus emerging markets, or if the euro as a funding currency makes a comeback, where you're better off selling euro versus emerging markets, which is the sort of feeling I have, will make a lot more sense anyway. The next slide, this is gold. Gold had a massive sell-off on the back of the Pfizer vaccine news, which obviously makes sense in a sense that if we have the vaccine, then some of the real downside risks of the economy may not sort of materialize. That 1866 pivot was challenged for the last few days. We held it. The key level is still 1836. I think if that breaks, that would mean this is no longer a correction, it's actually a trend change. We're not quite there yet, but gold has to get above 1900 very, very soon. Otherwise, it just risks another leg on the downside. This is really it for me. I think the market will remain challenging. We still have Brexit that is sort of going to be decided in the next 1 or 2 weeks. It does look like we get a deal, but who knows, maybe we don't. We still obviously have all the election mess in the US. So not all is good yet, but I think risk looks quite a bit better than it did. Thanks very much indeed. Bye-bye.